and I hope that you're all keeping well and keeping safe given the current situation. I hope that everyone is in good health, and you're looking after your loved ones, and wherever you are in the world. Because I know in the UK, obviously, we've just entered another lockdown. And, situation is not the best at the moment. So if you haven't, be sure to check in on your friends, your family, people who you aren't able to see, because this does affect everyone's mental health. Or even myself, I check on everyone as much as I can, because it's quite a scary experience. It's not nice, especially some people are living on their own. But anyway, that's not the point of this video, but I just want to make sure that everyone is keeping safe. So obviously, welcome back to another video, and this is a breakdown. Now this breakdown, I will try to incorporate a bit more information about what is actually going on and some mistakes that I've noticed from people using the free strategy. Now so I received 2 messages about this trade, so those are the only 2 people that I'm aware of that took this. There may be, actually no, there's 3, sorry, that actually took this trade, and I'm going to do a breakdown of it. Now the entries that some have taken is not where was actually a re-entry position for me personally, but I will do a breakdown of both positions. So in terms of Euro GBP, and one of the mistakes that I want to mention is you need to be aware of where you are in space. Now what I mean by that is, although it's quite nice to what we can see is, because I sent the markup for this trade to the students on the 4th, I believe. I'll put a screenshot up here anyway, which I shared in the free group, what you'll see. And although it's quite obvious to see that we've just broken 4-hour structure, and we should expect price to go from here to here and hopefully get to this low, right? It's pretty easy to see that, but you can't ignore the fact of what is going on in the higher time frames, because if we're looking from here, what we can see is price is very bullish. Okay, you can't ignore the fact that price, we've got this order block here, price has reacted off there and now it's starting to go bullish, right? You can't ignore that, but doesn't mean we can't intraday. So just be wary of the fact that you may not get a nice swing entry from this, but using the 4-hour is quite a good higher time frame to do this. Now although you can use this strategy on whatever time frame you wish, the lower time frame that you go without the multi-time frame analysis, the less your strike rate will be. Now strike rate comes up quite a lot. Now one thing to note is, for example, I've only lost one trade that I posted on Telegram, and that doesn't mean my strike rate is great, because I've only taken a handful of trades. So realistically, it's kind of hard to judge strike rate and how you'll perform, because everyone's risk appetite is different, and especially with this strategy, because you get so many different entries, it's up to you how much you want to be in the market. For me, I prefer using the higher time frame bias and then waiting, because I like to be as relaxed as possible, and that's what I want you guys to do, is find your most relaxing position to be in terms of trading. Because if you want to be in the charts, I didn't leave work to be sitting on the charts 9 to 5, because there's no point me leaving work then. I want to be as relaxed as possible and catch a nice trade, a big swing, right, with using minimal risk. And that's the way I trade myself. So it's up to you, and it does vary. But anyway, before I go on, actually not before I go on, I'll stop waffling and we'll go straight to it. So Euro GBP, we've obviously broken structure, and we know that we've got an order block sitting here. Right now, in terms of refining this, you can refine it to as much as you feel you want. So this is the 4-hour. So let's refine this. Let me get the next candle. There we go. Let's refine this. Let's go 5 minutes for this one. And by doing this, we're going to see where price can possibly reverse from. Okay, so what can we see? I'm still getting used to this mouse. I don't know why. Well, I changed to the Apple Mac mouse, and I don't really like it, to be fair. It's okay. I think I just need to get used to it. But yeah, I won't talk too much about that. So let's see what's happening. So we've got a mitigation here, but let's zoom in on that point a little bit more. Let's go 30 seconds. Has that been mitigated? No. Okay. So can we go 15? What date was this? 30th of December? No, we probably can't. Right. So what we can see is, and how I got here, you obviously, the first thing you need to look at is find your range. Now this is the highest point of the range, and this is the most extreme point. Okay, and that's the first thing you want to look for. Now remember the rules from the last video is, you know, finding the extreme and then looking to trade off there. Now this wick is obviously quite is very important, as I always mention. There is a reason for that, and I believe there is a OB on the lower time frame. I don't know if it'll let me. Oh, it does. Okay, let's see what is in here and whether this has been mitigated or not. Let me just lock that in place. There we go. Okay, so that has been mitigated. It's a bit of a weird situation, to be fair, on this one. I'll stick to the 30 seconds, but I feel that wick is quite it's quite important. But yeah, so we've got this. Let's use this. Now we've got this OB sitting here. Let's see if it's been mitigated or not. No. So this is quite an important one, because obviously price got very close to it, but it's not been mitigated and it's leaving that imbalance there. Now what this means is it's giving a reason for price to come back to this point of interest, right? It's building a cause. Okay, price needs to come and mitigate this, because regardless of how big the gap is, he's still got an imbalance which needs to be filled. Now I'm not going to explain what imbalance actually is. You guys can do your own research on that. I'm sure you'll find it somewhere, but you have to pay attention to the fact that, you know, price needs to come back to this point of interest, and that for me is the most extreme point. Now also I'm going to mark out this wick purely because it's relevant in the fact that it's grabbed liquidity from previous structures. All right, and you can't ignore the fact that, you know, that it's there. There's definitely a point of interest sitting there on another time frame which we can't see. But yeah, so I'm going to mark that out. I don't think this point of interest is small enough, so just bear that in mind. And I mention the wicks so often, and I hope that you know, you pay attention to that, because it's quite a good tip to just look out for when you're pointing out your points of interest. I said points way too many times there. So let me play this out and let's see what happens. So price reacted quite nicely off that. Now if you entered there, let's put a short in. If you entered there, you could have had, what your stop loss could have been. It could have been 3 pips. Yeah, about 3 pips, and your stop loss, your TP would be that low. So you can get a 45R trade from that. Now the trade breakdown, now our entry was actually there, and it was a 70R trade. But my first entries took a loss, and that was the first loss of the year that I had. And the second entry, I took partials, and then the rest was out at break even. And then I didn't bother re-entering again following that, which I had no reason to, but obviously I could have, but you know, I wasn't really looking to re-enter at that point, but I could have. But the re-entry that, or the entry that I'm going to talk about today was this one, and this is the one that was sent in to me. Now let's go back to here. So what we can see is, let me get rid of whatever's up here. I'm going to focus directly on what's happening here. So we know that in terms of range, we know that this was the high of that range, and this down here was the low. So we're trading this range, right? And we know we aren't going to look for buys purely because we've got a bearish momentum, and we've already covered whatever's up here. Price has no reason to go up. Okay, and we've just broken a 4-hour structure, right? Because we created this low, we had a pullback and then a break of structure. So this is the point where the break of structure occurred from, and was a very clear OB. So let's refine this to as much as we can, and let's go to the 5 minutes and let's see what happens. So on the 5 minute, what do we see? So Now, generally, when you get in situations where you've got a candle, this is a very bad candle, but if you get candles doing this, right? So you got your bearish candles. These are very bad candles. And say you get one bullish candle, which is technically what an OB is, right? And then you just continues on. That is not an OB. That is a continuation, right? Now, the reason why I mentioned this is because, let me get rid of this, because here, what we can see is, let me get my brush again. What we can see here, that's not a continuation, that's forming a base. Now, when you form a base, what you have to realize is this is when the banks, and I'm not claiming to know when the banks are trading because we will never know that, but these are one of the footprints that you need to look for, because obviously first we've got this impulse from this OB here. Yes, okay, retail traders are not causing this. Okay, now I myself, obviously, we're still retail traders. All right, we can't think that we're trading with the banks, because we're not. We're just using the footprints that they're leaving behind, right? So this impulse obviously was created by institutions, but then we form this base, and what that base is doing is accumulating their orders before we have this impulse. So price has a reason to come back to this OB and mitigate this, and this is the most recent one to use. Now, if you're in this situation where you've got two clear OBs, what you can do is, say for example, if you're using 1% risk, you can use 0.5% risk here and leave an order, or use 0.5% risk here and leave an order there. Right, and whichever one triggers, that's fine. Alternatively, you can enter the bottom and put your stop loss above the high. If you do that, your stop loss can be quite big. What was it? 6 pips for me? That's huge. But if you're happy with that, then fair enough. But for me personally, I'd rather take the loss. If this one loses, I know that I'll get a better risk to reward from the higher one. So this is the one that I'm going to be entering off. And let's put it just above. Let's just do 3 pips. I think he had a 2 pip stop. I know one of the messages he had a 2 pip stop. But yeah, anyway, let's go to the 4. Actually, let's go 1 hour, and I'll just draw this out. Apologies. And yeah, so let's let this play out. So it took a while to trigger. Now we've got a perfect trigger, and your TP is going to be exactly the same. You're going to aim for the bottom of the range, which is down here. Okay, and if you just press play, and it hit TP perfectly. So this was a 31R trade. Now you could have got away with a 2 pip stop, which is what the first guy used. I couldn't really make out what the second guy used, to be fair, but this was the perfect trade, a 46R trade. Even if you didn't catch it at the top of the range, which is fine, is not really an issue, but this is the perfect trade, and he had full reason behind it, right? So just bear in mind where you are in the range. Now, I mentioned this in the confluence video, is paying attention to what range you're trading, right? Exactly the same thing if you're going to use a lower time frame. Regardless of what it is, just be aware of the extremes, and that's the only points where you want to be looking to trade from, because the usual retail method would be from the high to the low. Okay, I've only got the 50% marked out, but the average one would be hold on, do I have, okay, yeah, there we go. So if we're doing it from this way, all right, the average, the golden wind or the golden pocket, whatever it's called, is somewhere here. They would have been stopped out, okay, if you're using that. And I don't know where the moving average would be. It'd be, I don't know, probably somewhere there. But you would have been stopped out by using those retail methods. Now, I'm not going to keep that. Actually, sorry, which one was it? That's not it. Where's mine? There, no, that's not it. There you go. I don't know why I did M, to be fair. But, okay, but that's how you would use it, right? So you want to be looking at the most extreme point of where price can reverse from. But if you still didn't get that, you still can think about, in terms of range, is if we're talking about what is going on, for example, on the hourly time frame, is we can do it on any time frame. As I said, is you just focus on range to range, because we've just broken structure here, right? Because we broke this low, we've created a failed high, then broke structure. So we broke this. Now the low is this structure here, and then we've got the high of this range being up here. Okay, just bear that in mind. So you got this range, and our price didn't come to this OB, which would have been your point of interest. So you probably would have had some orders here, but it's fine. But we broke structure again, right? And we know that we're forming a high of the range, which is here, and we're forming a low of the range, which is here. And then we've got a perfect entry sitting here, and the reason why it's here is because that's where the clearest OB actually was. So just bear in mind in what range you are and what position you're looking for, because here that's not much of a retrace. Although it got close to our OB here, it's not a full retrace enough for us to look for. It's not in the top 25% or the bottom 25%. If you're looking for a buy, you want to be looking at the bottom 25%. If you're looking for a sell, you want to look for a sell at the top 25%. So that's a good way to see it. So this was the range of here, but the OB was here, so we don't need to worry about what's going on here. Everything here has already been mitigated. The only point where price would want to come to was this OB here, but that's already been wicked into, and we don't need to go into that anymore, right? As you can see, it's already been touched. Even though it's just a wick, it's still been covered. There's no imbalance there for price to reach there. Okay, so just bear that in mind. But we've got a perfect trade here and perfect entry. I can't fault it. There's nothing really for me to fault at this point. But yeah, so that was a breakdown of Euro GBP and understanding ranges. So so the main thing to take away from this is understanding what range you are, looking for the most extreme point, and then trading off there. If you get 2 points of interest like we did in this POI here, so if we go back to it on the 5 minutes, so if you get this situation, you know that you can use the most recent one, or you can cover them both, or split your risk, or put your stop loss above the highest point and use the lowest one as your entry. Okay, it's completely up to you. For me personally, I would just take the loss here should it lose, and then enter on the second one, okay, at full risk. Okay, I wouldn't split my risk here personally, but it varies on your risk appetite and whether you're comfortable taking a loss. Because to be fair, if you think about it, in terms of taking a loss, if you've just won a trade that is 4 to 6R, those 1 or 2R losses doesn't mean anything. They're still a loss. Yes, it's not nice, but it shouldn't really mean a lot, and it shouldn't affect you that much, because you should have this under your belt. Okay, and having price had no reason to, we had no reason to close the trade early, because there's no break of structure to the upside for us to say that price is changing. So that's another thing to pay attention to. If you're worried, just look and wait for a significant break in structure to the upside to confirm that price is going bullish. Because although we've broken structure here, right, it didn't sustain, and to confirm it, we need another break structure anyway, right, to confirm whether price is changing. Okay, because even though we're getting a pullback, we're bound to get a break structure to the opposite side. That's fine. But if you think about it from a momentum point of view, this only took 1, 2, 3 from here. Okay, 1, 2, 3, 4, 5 candles, and it took, I'm not going to count how many candles, but it took significantly longer to even get there. Now at this point, if you think about momentum, okay, so 1, 2, 3, 4, 5 candles down. 1, 2, 3, 4, 5, 6. At this point, I would place the order, because it's already taking longer to get up there. So you've got more confluence behind the reasoning for this trade. But I will leave you guys there. I hope you found this breakdown useful. If you did, obviously leave a like. And if you're still if you're using the free strategy, drop us a message with your trades that you've taken, and it just gives content for people here for free on YouTube, like you guys, who find this useful. Also, I just want to mention that our bootcamp is still running, and we still have spaces on January the 23rd and 24th. If you want more information, obviously visit our website at vertexinvesting.co.uk. The discount code the discount code for the bootcamp is NY500, and that will give you £500 off the bootcamp. But not only this, you'll get full access to us. You get full access to our course, And you can record the bootcamp. You know, we're not going to make you sign an NDA for it, because, you know, why should we? We didn't invent this strategy, but we've invented our own method for it. But, you know, it's nothing really that's overly unique in a 500-year-old market. You can't claim to like create something, you know what I mean. But it's our own interpretation that you're learning. You also have the course videos that you can rewatch to refresh your memory, as well as having support from us within our community group and our bi-weekly team calls. But yeah, I won't go on about that anyway. As I mentioned, is although we're selling a course, for example, you can still use a free strategy and do really well. You don't need to join us in order to succeed using smart money concepts, because everything is given to you here, right? The only difference is you're paying for our time and our support should you want it. So don't feel obliged to join, because you don't have to, okay? But the option is there. But I'll leave you guys be, and I hope you all take care of yourselves, and yeah, stay safe and trade safe.